Hello, hello, Remote Work Europe. It's great to have people with us already. And today we're going to do it. We're finally going to get to the bottom of all your questions about tax and debits and everything that's going on with your money and your admin in Spain. All those things you've been dying to find out and finally get a grip of. 2025 is your year and it's going to happen. So if you're watching already, we know there's sometimes a slight lag on some of the social streams. Please drop us a comment and tell us your biggest question, the thing that confuses and frustrates you most about your money in Spain. And hopefully we'll get to some of those at some point during the presentation or afterwards. So drop us a comment just to let us know that you're receiving us loud and clear, or maybe everything's perfect and you just dropped in because you wanted to see me and Louis having a chat. But we would love to hear from you. If you're watching, Diana's watching, that's great. So we know we've penetrated as far as Andalusia, which is a great start. But we know it often takes a little bit of time for these streams to warm up and everybody to be receiving us across all the different networks. Okay, Lucy's watching. That's great. That's direct on the webinar. So I'm going to hand over to Louis anyway, because I know we've got a lot to get through today. So I don't think he'll need much introduction for most people watching, but Louis is the CEO and CFO of Entre Tramites, who are our professional partners for Spain within Remote Work Europe. So anything to do with tax, immigration, admin, we send them all to Louis and his team because they're qualified to help you with all of those things. We're not, and most of the members of our community are not. So we bring in experts whenever we can. So over to you, Louis.
Thank you very much, Maya. And happy to be here, as always. So today, what are we going to be touching on? I'm going to have a couple of slides to summarize. Today, we're going to be touching on effectively income tax, the Modelo 720, the infamous 720, and then dropping back into regular autonomo and self-employed accounting questions, and then the questions which matter to you and what you want to get resolved. As always, we'll try and present for the most relevant, widest covering considerations. However, we know that each of you may have specific questions which are more relevant for your situation, and so we are here and open. So as Maya said earlier, please comment in the different social media channels what questions you might have, pop us in any questions, and we will be very happy to respond and answer. So I think we should start with income tax, no?
Everybody's favorite.
Right. So let's start. Residency. What happens, and if you've seen this before, I apologize for boring you to tears, but this is important. What happens if I live less than 183 days in Spain? Maybe you were just moved from, let's say you've been working in Germany until September last year. You moved across to Spain and you started a new job working in tech sales in Valencia, for instance. So you've been here 90 days. Where are you tax resident? Well, actually, if you live less than 183 days in Spain, usually what that means is you are tax resident in your other jurisdiction. So what do the tax authorities say? They say, okay, when you get to the end of 2024, where were you that year? In this case, if you were less than 183 days in Spain, but you were 183 days in another country, you will be considered tax resident in that other country. Now, one mistake that people make is they then say, oh, okay, so that means I don't need to pay anything in Spain. Well, it really depends on whether you have Spanish origin income. For instance, let's go back to the scenario of somebody who's moved from Germany to Spain, was in Germany 270 days, was in Spain 95. Now, you were working and therefore you should have been paying the non-resident tax rate of 19% on your income tax every month. Why? Because you're non-resident within Spain, you should be withholding the tax based on being non-resident while being taxed while being tax resident in the EU. That income you make in Spain, you would pay 19% tax to the Spanish authorities, and then you would go back across to Germany and say, hey, I paid 19% already on this income, And Germany would say, well, actually, under German taxes, you should have paid 25%, therefore pay us the 6% difference, okay? Now, this varies and depends on your income level and exactly where you were. But the critical thing is, if you were living in another country for more than 183 days, you are going to have to pay tax, usually on your global income from that other country. So this is very important for people who may have moved jurisdiction in the thing. Now, you'll see 19 and 24% on salary. That's because it really depends on where you are living. Okay, so if you are resident within Spain, not within Spain, sorry. If you're a resident within the EU outside of Spain, you would pay 19% non-resident tax. If you live outside of the EU, or more strictly the European Economic Area plus Switzerland, you will pay a 24% rate of non-resident tax. Now, for dividends, capital gains, and bank interest, so the base de ahorros, it's 19% regardless. Whereas on Spanish rental income, small error here, it's 19 to 24%, same rule as Spanish salary. Now, there's a third point for the non-residents to be aware of. Let's say you're like, well, this doesn't apply to me. I come and travel across to Spain 60, 70, 80 days, maybe 120. I actually live most of the time in the UK. But I did buy a flat and I own a property in Malaga. In Spain, even if you do not rent out that property, you have to pay a tax on the imputed rental income, i.e. a theoretical rental value of that property when you are non-resident. So any overseas property earners, even if they do not generate any income, must pay that tax. So if you are watching in, you maybe do not live in Spain, you do not work in Spain, but you do have a property, you will need to file what's called the Modelo 210. And if you've rented it out and you had rental income, or if you had Spanish salary, you're meant to be filing that Modelo 210 by the 20th of January, i.e. in 6 days. If you are in the situation of having your property just for this imputed rental income, i.e. this theoretical rental income you never got, you are going to pay taxes you need to make that filing at any time within this year. So you've got more flexibility. Okay? So that's the situation of if you live less than 183 days in Spain. What happens if you live more than 183 days in Spain, or you live less than 183 days in Spain, but you also don't live in any other country more than 90 days, and you are deemed to have your strongest links being Spain? In this case, you are viewed as tax resident in Spain. That means you must pay income tax on your global salary. You must pay income tax on your global rental income. So if you've got a property rented out in the UK, if you've got a property rented out in Switzerland, this income is taxable in Spain. Now, if you've paid any tax already in the UK or Switzerland, those taxes would be deductible off what you eventually need to pay in Spain. The other thing which is important, and I haven't put wealth tax here, but we will get onto wealth tax apart, is there is a 19 to 30% tax on Spanish dividends, capital gains, and on global dividends, capital gains, and bank interest. Okay, that tax is 19 to 23% on the first 200,000 euros, but then jumps to 27 to 30% for anyone above 200,000. Now, you might be listening in and thinking, well, that's a lot of money. That's entirely true. But let's say you bought a home 20 years ago, which you had rented out. That capital gain could very easily go above 200K. So this is where it can be particularly relevant, particularly when you have a big one-off or the sale of a business that you may own overseas or in Spain. Now, you have the flip side. In the respective country, they have a right to impose withholding tax on salary, rental income, and dividends in that other country. Now, these withholdings in general are deductible from your Spanish taxes. Okay, so that's what double tax treaties do. They avoid you paying the full rate of tax in both countries. So, what do you need for your income tax return? In general, most people file independently, because joint filing in general only makes sense if your partner makes less than 5,000 euros. There are a couple of caveats around this where it can be slightly higher than that. But if you have if you're a working couple, then it almost never makes sense to make a joint filing. You'll need documentation on the income you've received, any expenses which may be deductible, and your tax return can be made online or in person. In general, we recommend using the online submission feature, as the Spanish bureaucracy has got a lot better on online submissions. Now, there are two different types of returns which we run. Maya will share a link towards these different tax returns, but effectively we in-house offer two different types of treatment, kind of a basic income tax return. This is a flat price basically for everybody who has just got income earned from within Spain. They've got stocks and shares, investment assets, everything else. They've got, you might have salary, whatever. This is simpler for us because we basically do not need to do double tax relief, which can get quite complicated. And we also have international income tax returns. These are basically if you have overseas income where it's very important to reclaim the double tax relief. And this is one thing which unfortunately we've found quite commonly occurring in Spain, where many accountants will include the income but include the taxes paid on that overseas income. So you could end up paying double tax when you don't. Now that varies depending on the complexity of your return, and it's from about €68 plus VAT per filing. Okay, we will share all those links with you in the different comment chains, but just to make it aware, that's kind of how we internally break this up. Now, important dates. We're talking to you now, but if you're doing the regular income tax return, not the non-resident return, actually, you can only start submitting from April 2nd. We recommend you signing up in February or March because that means that your accountants would have time to prepare. And if you're doing it yourself, start early because it always gets more chaotic as you get near to the end of the deadline, and everybody tends to leave stuff last minute. And I promise you, if you are using a provider such as us or any other third party, you will get a worse service if you are signing up as of June 15th. Because they will have far more clients to have to deal with at the last minute. You can also make submissions based on telephone, although we really do not recommend this because the Spanish telephone support on income tax returns often collapses and is very hard to get through. In person is not bad, but again, online filing tends to be the easiest way, and you can do that with either clave or a digital certificate, certificado digital. Before I get onto the Modelo 720 and other complexity, I'm going to touch on the wealth tax. And why have we used the example of Catalonia? Because it varies based on your autonomous community. Okay, so depending on the autonomous community where you're based, for instance, if you're in Catalonia or Valencia, if you own more than 500,000 euros of assets, excluding up to 300,000 on your main home. Now, your main home can only apply to a Spanish resident property, for clarity. You have to pay a tax on your worldwide assets, which is progressive depending on your level of income. For the rest of Spain, it's around 700,000 euros of a deduction. Now, if your assets are below this, just ignore this section. This is not relevant. But there are only 4 or 5 different autonomous communities where there is an exemption up to 3.7 million, which is Madrid, Andalusia, Murcia, and Cantabria, where there's a 3.7 million exemption from the wealth tax. And the Balearics, due to an error when they were trying to submit their extension of a tax-free amount, has 3 million exempted. Okay, so in these 5 autonomous communities, very few people will be liable for the wealth tax, but you should be aware that you could fall under this, particularly if you have an overseas company or a business which is working quite well, because private assets are valued at 5 times the multiple of their profits. So if you have a business which made an average of 200,000 of profit a year, that business is worth $1 million to the Spanish tax authorities. So this is quite important if you're looking at limited companies which you may have overseas. Okay. Now, if you live in any of those 5 provinces that I meant, autonomous communities that I just mentioned, and you have less than 3.7 million, but you have more than 2 million euros, you will need to file the wealth tax allowance, but you will not need to pay it. Okay, so if you're in any of those regions, anybody with more than 2 million, wherever you are in Spain, will need to file the wealth tax return, even if you don't need to pay anything. For the majority of people in Spain, if you have more than 700,000 euros of assets, you're taxable. In Catalonia and Valencia, it's above 500,000 euros of assets. Okay, and this is a separate return. It has the same filing deadlines as the income tax return, and the wealth tax return is only individual. It is not possible to file jointly. I'm just going to pause for a second and see, Maya, if there are any questions you think might be relevant to bring up. Any questions from yourself? Any comments that we have from the audience?
Yeah, I think most of the questions so far are things that you're more related to income that you're probably going to cover as we go forward. So there is one about property that might be useful to look at here, because this could come under the wealth tax as well.
So if you are Spanish tax residents and you possess immovable property in another EU country, do I need to pay theoretical rental tax from this property? So this is an interesting one, this one. If you have any second property in Spain, even if you are not, even if you are resident, there is a theoretical rental income from that overseas property if that overseas property is not rented out. If it is rented out, then you pay the actual rental income and you pay tax based on that. If not, you do theoretically need to include the theoretical rental from that property. And this applies if you have another immovable property in another EU country, or you have a second property in Spain. This particularly catches out people who may have like a small flat or something else like that, which they may have, let's say, a child living in, where they may not be paying any income tax or any rental against it, where they need to pay based on this theoretical rental tax. Now, just to be clear, the theoretical rental value has a bunch of reduction factors, but within Spain, it's based on 1.1% of the cadastral value is the theoretical rental income, or 2% of the cadastral value if the value is very old, basically if it hasn't been reviewed. In general, this tax works out at about, if you're non-resident, 0.2% of the true market value of a property. If you are resident and it doesn't have a cadastral value, they basically say that the value of the property is worth 50% of what it was bought for, basically. So there are lots of different, it's a bit nuanced, basically. So if your country does not have an official cadastral value, they have a different way to interpret based on old sales value. But yes, you need to pay the theoretical rental tax on this property.
Okay, and just to clarify, that only applies to other EU countries?
No, also overseas properties, wherever they are.
Right, okay. And also just to confirm that this has nothing to do with the tax that's proposed yesterday in Parliament, which was getting an awful lot of media attention overnight, which we will have to come back and do another webinar on if and when it becomes law.
So the 100% theoretical tax to impose on non-EU property, and they're not even clear in what they're saying, whether it's going to apply to people who are EU nationals, who live outside of the EU, or if it only applies to, or if it applies to everybody living outside of the EU. The reason and what they could do, there are good examples on that reference point. For anybody who saw this, Sanchez talked about 100% tax on the purchase of properties by overseas non-EU resident, non-EU nationals. It's going to be interesting to see how they lay this out within it. Again, Spain can use, like Denmark used, restrictions on purchase of certain types of property for non-residents, and that can even apply within the EU. So to European buyers, but again, this measure's slightly redundant if they're excluding EU buyers, seeing as of the top 5 buyers of property in Europe, in Spain, 3 of them are EU nationals, Germans, Italians, and I can't remember the third one off the top of my head. So yeah, we'll see what happens. We'll see what happens with that announcement.
Yeah, we'll go beyond the headlines at some point once there's something more substantive there. There's one more question which relates actually to your first slide about non-resident taxes, and it's just to clarify whether that applies or not.
So I am a tax resident in Spain. If I will be outside of Spain for more than 183 days and in no other country more than 3 months, will I not have to pay tax in Spain, or will I still be taxable in Spain? If you're in no other country for more than 3 months, you are almost certainly going to be regarded Spanish tax resident, because your tax residency will reside with your previous tax residency. One of the most important things that everybody watching this is aware, it is impossible to not have a tax residency. So if you think you are constructing any scenario where you have no tax residency, it's a lie. What you can do, and what people do when they become digitally nomadic and genuinely nomadic rather than remote working, such as, apologies. So digital nomads are, most people who say they're digital nomads are really remote workers. Okay, so I'm a remote worker, but I'm not a digital nomad. I mainly live and I have a base in Spain and everything else, but I work online remotely. If you go and travel overseas and you start traveling all over the world, it's super important to establish a tax residency in another jurisdiction, which may be very low tax, and then you can continue paying taxes as resident in that country if you then are not staying anywhere. But if you just go from Spain, travel a lot long, live in Indonesia, travel across into lots of different jurisdictions, you are still going to be considered Spanish tax resident until you establish a new residency. So even if you're less than 183 days in Spain, if you have no other country where you've been more than 3 months, you haven't clearly established in the meanwhile a new tax residency, you will have to pay taxes in Spain. You will be taxable in Spain on your global income.
It's good to clear that up, I think, because it's actually quite hard to renounce a tax residency, isn't it? I mean, you've actually got to establish somewhere else in order to step away.
And this is a very important part, because the other thing people say is like, hey, but this country views me as tax resident, so it's great. Well, that's all very well and good. Countries love making you tax resident. Everybody wants to make you tax resident. So you might find that a country said, yeah, you can be tax resident and you're just in that country for 2 days. But if you are beyond 90 days in Spain and you show significant enough links within that, Spain can very easily turn around and say, oh yeah, that's all very well and good. I understand you've got a tax residency certificate. Can you show me your rental contract or your utility bills or your property which you've purchased in that jurisdiction to prove that you really do live there?
And if you can't fully renounce Spain, you're still here.
And you've secured a new place. And particularly when people go to more tax advantaged regimes, for instance, if you suddenly say you're German tax resident, it's less likely the Spanish government are going to particularly care, because they're going, oh, who would make a tax move to Germany? But if you suddenly come registered in the Seychelles, they might be a bit suspicious.
Surely not. It's just the weather's a bit warmer in winter. That's the main reason. Got to be.
Exactly. So beyond that, what other taxes are relevant just to be aware of? Inheritance and gift tax. This is one of the big errors which people often make. They think, oh, I'll just wait to declare an inheritance to my income tax return. No, if you receive an inheritance or a significant gift, you actually need to report that usually within 30 to 60 days of receiving that inheritance or gift. Or if it's a gift, if it's an inheritance, it's within, I think in general, 6 months of somebody passing. Now, if somebody passes but still hasn't gone through probate, it's super important that you inform the Spanish government to request for an extension to avoid any fines and just to pay a very low rate of interest on that. And if you live in Spain, in almost all scenarios, you are inheritance tax liable on the assets outside of it. So even if you had an inheritance in, let's say, Germany, it could still be taxable within Spain, although they do attribute inheritance tax relief against that. Now, on the other side, VAT. Oh, yeah, please, Maya, because you had a reaction there.
I was just going to jump in and say, you mentioned a significant gift. Is there a number you can tell us in relation to that, or is that one of those it depends?
Unless you're in Madrid, where actually, whatever your political persuasion, Ayuso did a very, very sensible thing. She went and said, well, it's ridiculous that technically in Spain, legally, any gift you make must be taxed. According to the legislation, you gift somebody For instance, you go to a wedding and you give them €100 as part of a wedding. That theoretically, the person receiving the gift must declare all of those gifts individually on a gift tax return. Now, in practice, nobody really does. Inclusive gifts, which can be for personal holidays to kids, there's all sorts of things for Christmas gifts and everything else, which technically under the legislation are taxable. Now, only Madrid has passed legislation to say that if the gift is less than €1,000, we don't care, basically saying that it would be silly to waste time on it. Actually, everywhere else in Spain, as far as I can tell, it still remains the case that technically any gift must be declared. In practice, if it's above a few thousand, you should be filing a gift tax return on it. If the legislation, and this is one of the really uncomfortable things which occurs in Spain, where, and it was a real learning experience for me, is you have, in the Anglosphere, you have a concept of a grey zone. A grey zone is where something is not clearly banned or allowed. It's something where, often described as loopholes, anything else where it's not defined in the legislation. In Spain, the grey zone means it's illegal, but they don't enforce it. Because Spain loves passing legislation on almost everything, but then only partially enforcing the legislation because they think it's the right thing to do to pass legislation, and it's very politically popular to say, I'm declaring this. A good example of that is if you look at the reporting of hours in Spain, technically, legally, everybody must be reporting hours in a trackable, usable system for every hour they're working while in employment. And it's well known that there's widespread falsification. None of the major consulting, accounting, legal firms, none of the major corporates abide by the legislation, and nothing happens. They just fill out a fake timesheet, in effect. And it's well-known non-compliance. Now, technically, that's completely prohibited, but it's a complete norm. We know people start off being self-employed, taking a little bit of cash in hand, starting off for the first couple of thousand when they might start being an English teacher, might start teaching something. That is technically completely illegal. But in practice, the state turns a blind eye. So this is one of the examples of where you need to be aware that it's technically not allowed, but until you go above 3,000, 4,000, 5,000, I wouldn't be particularly worried.
Okay, no, that's useful. We've got some more general questions related to sort of property and inheritance. Here's one about inheritance tax in Andalusia.
Thanks. I'm in the UK and moving back to Spain in a few months. Planning to set up an online business, but my residence will be in Spain where I own a property. My mother passed away, but I understand we don't pay inheritance tax in Andalusia up to €1 million. So, if you are in the UK at the moment, you are most likely, and this will depend, okay, we're getting into complexity. So Maria, depending on if you have non-dom status in the UK, it is possible that you will not be taxed under this. Now, where the UK government may not apply inheritance tax. If you do not have non-dom status, the UK can potentially have taxable authority over the inheritance from your mother passing away. Now, if it's below the UK tax free threshold, you don't have anything to worry about. But if it goes above that, you could owe the 40%. Now, in Andalusia, it is true that effectively on an estate, you don't pay it if you are inheriting from your parents. You do not have any inheritance tax in effect to pay. However, if you have a I'm just trying. Sorry, this is a multi-layered question, so I'm just trying to make sure I get it right. In inheritance tax, there is a 99% relief in Andalusia and Madrid and Cantabria and a few other jurisdictions if you inherit from your parents, basically. This means that you pay effectively, let's say 30%, 40% taxation on 1% of the assets. So like 0.3, 0.4%. And of course, the notaries always seem to get more cash than they ever should, and will also get about 0.3, 0.4% of the assets. Okay. for the notarial registration. Now, I'd say the really big and important thing for you on this one is checking the UK treatment, and that you're not being caught up by UK treatment if your mother's passed away. I'm sorry to hear that as well on this front. But I would just check that you don't have a UK liability, because although Andalusia might effectively almost not tax it, you could potentially be liable to UK tax on it. Now, with planning an online business, and this is a very important thing on concept of where you pay taxes. Tax is based on where you are, where your substance is, okay? Your substance is you and your laptop. That is your factory. And the tax system doesn't say where your clients are or where taxes should be paid. It's where the production facility is. And you and your laptop are your production facility. So even if you set up, let's say, a UK limited where you operate your online business, you should not be leaving profits really there unless you have employees. You should be re-invoicing the vast majority of these profits back into Spain as, let's say, an autónomo, if you are resident and living in Spain.
Okay. I've actually, some of these are quite complicated questions that are coming through now. They are multi-layered. I've dropped the link in to book a private consult directly with Louis if you want, because obviously some of these need a lot more information in order to answer them fully, but that's quite personal and private information. So you'll want to take that offline and go into further detail, I'm sure.
Yeah, just to confirm, I'm just confirming that's the link you've been sending around, correct, with Maya? Just to confirm, I've just sent it through you on the private. Perfect. Yeah. Just confirming all these small little logistics which we come in. So
we want to make sure we're getting the right information.
Be aware for anybody who might be newly in Spain, might be only more recently arrived, is in Spain they have a very high property transfer tax, which is similar to stamp duties in other jurisdictions. The normal rate of property transfer tax is about 10%, and you'll pay the notary about 1%, 1.5% in addition to this between the notary and the mercantile registry. In the Basque country, there is a significantly lower rate of around 4%, 5%. And there are small reductions in Andalusia and in Madrid, where it's more like 7, 8%. But the property transfer tax in Spain is very high. And so this is why the property market in Spain actually moves very slowly in general. Spaniards in general do not buy and sell property. They own their property. They might buy it and then they might own it until they pass and it gets passed on to their children. Okay. Because there is a very high transaction tax on purchasing and sale of property.
Okay.
Now,
I've got a couple more questions on property. Is it worth looking at those first?
Let's go for a couple more questions on property, and then let's jump into Modelo 720.
Okay. Yeah, I just wanted to pop this one on the screen about buying a house jointly with a partner.
I am a Spanish tax resident and I'm about to buy a house. My partner will pay me monthly money to buy their half of the house over time. Is the money they pay me each month taxable? Right. So when you talk about that, my assumption is that when you buy the house, will it be technically bought in both of your names, but you are providing the majority of the cash? If that is the case, you can treat it as a loan, and you can have a loan agreement between you and your partner, and the amount that they are paying monthly is paying off this debt between you. For instance, let's say you put down 100,000. Let's say you buy a property for 200,000 euros. You finance it with 100,000 of cash and 100,000 of mortgage. Let's say you provide all the cash initially. Let's say your partner is paying 50% of that. So your partner is paying 50,000 and you are paying 50,000. Under such a scenario, it would be treated as if you own the property 50-50, but your partner has borrowed 50,000 euros from you, which they then repay. That is usually the cleanest way, and under that, they're completely non-taxable, basically. That's usually the suggested way to do it.
Okay, so get a notarized agreement, just so there's no question of it being treated like income to you, that you're getting this money. Yeah.
And you can record it even without a notary using It's called the Modelo 600 or 650. I can't quite remember the exact numbering of it. But if you need help on filing that, we also do filing on that. And we also, for anybody who's watching in here, we also help on real estate contracts and everything else. I can pass on a link in relation to that as well.
Yeah, or I'll just drop the general landing page that we have with you to book in for a quick consult, and then I'm sure you'll get pointed in the right direction. And we've got one more on property purchase, which is about when
I'm moving to Galicia this year to live in a house I bought. Should I do something? Okay, very important. If you've already bought this house and you haven't moved there yet, you need to file the Modelo 210 on non-resident taxation, okay? To further create more confusion of everything we're doing at the moment, Maya, if you could share one last link, which is to do the Modelo 210, which would be very relevant for Guy here. Basically, you need to file the non-resident tax for, let's say you bought it in 2024, you'll need to file the non-resident tax now for that property. If you bought it in 2023, then you would have 2 years of this to file on the imputed rental income of the property. So that's very important. In terms of taxes upon arrival during the year, this is going to depend a little bit because the whole concept of 183 is retrospective. So let's say you move to Spain and you're working remotely from Spain. Once you if you hit 183 days during 2025, you will be taxable on all the income you made that year, even if you were paying taxes and registered. Now, if initially, let's say you're registered as self-employed in another country, let's say you are registered in Ireland, for instance, you will pay taxes in that country. And then when you go to file your Spanish return, you'll have to include that Irish self-employment income, and you'll get tax relief on the income tax, but not on the social security payments, okay? So the only thing just to be aware of is you should be putting aside money based on the income tax that you would be paying in Spain, and not thinking, oh, well, I got some income here, I can pay the lowest rate of tax there, and then some income here and pay the lowest tax there. This can be sorted out near the second half of the year and everything else. The only other thing now you're triggering is if you are a high earner and you potentially have access to be able to get Beckham's Law by being posted under an A1 certificate or something else, it may be worth pre-planning, because otherwise, if you don't make that call within the first 6 months and don't structure yourself correctly when landing, you could miss the ability to get Beckham's Law, which is a special tax regime of a flat 24% income tax rate and an exclusion of your overseas assets from taxation. So if you are a high earner and you've got a similar position to Guy, by high earner, I mean anybody who's making 50, 60K upwards, or if you have significant overseas assets, such as a property rented abroad or anything else, and you're moving to Spain, I would potentially recommend booking in for a consultation with me just to basically run through your scenario, because that can be particularly nuanced on that.
Okay, right. All of this is like little short questions, but the answers are so complex and long, but that's tax, right? That's why we have you, Louis. And we're very grateful for that. I think all the rest of the questions relate to income taxes and things. So I'll let you move on and carry on.
So I'm going to just jump in on this and just quickly touch on the Modelo 720. This is very important. If you have 50,000 euros or more in bank accounts or securities or effectively real estate, insurance is to do with life insurance contracts, which is another form of investment. If you have more than 50,000 euros of any of these overseas outside of Spain, you must file the Modelo 720 if you were resident in Spain in 2024. So if you lived in Spain in 2024, if you have already filed the Modelo 720, you do not need to refile it unless there's been a significant variation in your assets. But this is very important to file. There was also a bit of a mistake and a misunderstanding. The Spanish government made a ruling, because previously the Modelo 720, you theoretically could be fined 6,000, 10,000 euros, even higher, for failure to file or small errors in it. What they ruled was that errors and failure to file can't have such a high penalty, and it should be in line with the other forms for failure to file. And so we're talking a couple of €100 for failure to file, a few €100. However, if you don't file the Modelo 720 and then they figure out that you've got some assets which you haven't declared in a 720 or anything else, the Spanish government are particularly punitive on basically pursuing that because they assume you are cheating or lying. Basically, honest people don't show us their assets. People who are looking to cheat the system do. So if they find a transaction which is linked to one of these, a large bank account or something else which is missing, which then unravels later. So please, 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 if you have more than €50,000 of assets overseas, make a filing of the Modelo 720. Now, this is €50,000 in any of these asset categories. For instance, if you have 20,000 in bank accounts, 20,000 in real estate, and 20,000 in investment securities, that would not count. Even though they add up to 50,000, it's 50,000 of combined assets in any of those categories. The most common one for people is usually real estate, or if they have like private pension funds, for instance.
So, yeah. I wasn't sure whether pension funds were included in the totals or not. There seems to have been some conflicting information over the years about that.
So it depends on age. So on pension funds, if you are, and this is also depends if they're recognized as a pension fund within Spain. For instance, Roth IRAs are not recognized as pension funds. ISAs are not pension funds, but are similar to what other countries might treat them. Superannuations from Australia are not pension funds under the normal tax recognition. As such, any of these, even if you're not yet of age where you can draw the assets out, may need to be declared. The general rule is if the pension does not need to be drawn, you don't legally have the ability to access it yet, you do not need to declare it. But if you are of an age where you can legally withdraw the cash from it, then you have to file the Modelo 720.
Okay, so it would suddenly appear, if you like, you could be paying into a pension for decades, and then suddenly when you're, whatever it is, 57 or something, it appears you've got this massive fund overnight.
Yes, except very important thing is there are lots of restrictions on contributing to overseas pension funds once you are Spanish tax resident. So, for instance, let's say you've got a IRA in the US. Once you move to Spain, you cannot continue contributing to your IRA. Mm. If you do, all the contributions are non-tax deductible, so it makes no tax sense in the world. And that's the same for UK private pensions, because in the UK, you could put aside up to £60,000 a year, but you cannot contribute to these pensions while you are resident in Spain. You must choose the Spanish pension plans for that.
But just to be clear, if you had a paid up pension pot in the UK, you wouldn't declare that on your 720 until you reach retirement age. Yeah. Asking for a friend.
Until you reach the point of accessibility of it. So in the UK, I think you can draw from 55 or 56.
Okay. Right. Okay. That's great.
Now, if you don't declare it until you're 65, when you're actually drawing or anything else, you probably are going to have no issue with that one, because it's not clear how they treat early withdrawal and early access within it. But in theory, at 56, 57, once you can do early withdrawal, it would be. Now, very quickly, this is just a reminder for those who are self-employed and might have limited companies. Just a quick reminder, if you are registered as self-employed or have a limited company, you should be filing at the moment your quarterly VAT for the fourth quarter of last year, and you must file April, July, October, and January. Now, continuing on that basis, this is just for the self-employed. You should have been filing taxes every quarter under the Modelo's 130 and the Modelo 303. Okay, the Modelo 303 is the VAT return. Again, if you are selling your services outside, business-to-business services outside of the EU or within the EU to companies which have a VAT number, you will be charging 0% VAT to those clients, and your VAT returns will actually be reclaims. However, if you are selling to Spanish-based clients or you're selling to retail consumers, in general, you will need to charge VAT to those clients. It is not like in other countries where you do not need to register for VAT. In Spain, from the first euro, you should be registered for VAT. There is not a VAT registration threshold, okay? The only other thing is, if you've got a particularly big business, so if your turnover goes above $1 million, you need to pay the tax on economic activities. This is a small additional revenue-based tax, it works out at 500, 600 euros per million euros of revenue. Okay, this is not usually a big issue, but is a slightly unknown tax, which sometimes people who have successful restaurants, for instance, or have a supermarket chain or anything else can get hit by. Now, in terms of income tax rates, this varies by the autonomous communities, but just to give you a rough idea of what we're talking about, on the first 12K, you pay around 19%. Now, you're going to ask about the tax-free deduction, so I'm going to get on that in just one second. From 12.5K to 20K, you pay around 24%. From 20K to 35K, you pay 30%. From 35K to 60K, you pay around 37%. From 60K to 300K, it's about 45%. And then from 300K upwards, it's 47%. Now, critically, these are not cliff edges. So when you go up from 20,199 euros to 20,201, it doesn't suddenly mean that all your income is suddenly taxed at 30%. It's just the 20,200 to 20,201, that additional euro, which pays that tax rate. On top of this, the tax-free allowance plus the general deduction works out at about 7,500 euros. What this means is that on this first bracket, which you have here, actually in practice, how does it work? It's really from 0 to 7,500 euros, you pay nothing. Then from 7,500 euros to 12,450 euros, you pay 19%, and so on, so on. Okay, so the critical thing is your marginal tax rate, i.e. what you pay for every additional euro you make, will be around these brackets. It varies slightly depending on where you live in Spain, but actually the local governments vary it very little. Okay. As a general rule of thumb, the average tax rate, once you include the tax-free deduction, works out at about 20% if you make 32,000 euros. So if you make 32,000 euros or less, you'll pay 20% or less on average. If you make more than 32,000, your tax will go up. Then at around 52,000, it's about 24% average rate of tax, and so on, continuing along these lines. Okay. And it particularly starts to climb once you go above 60K. Okay. Now, you should have had most of this income tax withheld if you're an employee, and it should mean that you should have only a very small amount to vary. One thing to be aware of, the Spanish government's income tax calculator, which is used for most people's employment and payroll calculation, does not include the local regional variation. So if you are in a state with slightly higher taxes, such as Valencia, Catalonia, slightly higher, not much, it is likely you will have a small amount additionally to pay, maybe about 1% of the income you have made for the year, 1-2%. Okay. Whereas if you're living in a low tax state, such as Madrid, you might be reclaiming about 1% income tax. And this is because the Spanish states one only operates based on the national theoretical rate. It does not localize payroll withholding. This is for employees, particularly if you have overseas income. This is for autonomos and the self-employed. For autonomos, you will have withheld, if you have overseas clients or retail consumer clients, you should have been paying 20% quarterly as prepayment. The income tax rate for salary, rental income, and and self-employed income all falls under the same tax regime of what's called the base general. On the other side, base de ahorros, which is 19 to I don't know if I've got a table just here. Actually, I don't just have it here, but there's a 19 to 23% tax on the first 200,000 of interest, dividends, and capital gains on the other side. Now, I'm aware of the time, and we've got about 12 minutes left, so I'm just going to jump slightly over the self-employed accounting, because if you are self-employed, please reach out. We're happy to help and everything else, and you are looking to set up and get set up. However, I'm aware that for many people, it's coming to the end of the tax return season, so there are certain tax deductions and things to be aware of. So for the self-employed, you've got your general expenses and everything else, which you should have been filing within your quarterly returns, and the same for limited companies. Now, if you are not self-employed, if you're a general tax return filing, you may be thinking, what is relevant for me? Now, tax breaks at a local level tend to be very small for the employed for the employed and people who are not self-employed. The only very big tax breaks to be aware of is if you invested in a startup in the last year, you can take, and they were within Spain, for every 100 euros you invested, you can get 50% off your tax return. If you have a tax return with, so for every 100 euros, 50% of whatever you invested could be deducted from your tax return. If you've contributed to a pension, a private pension plan, where you can contribute up to 1.5K if you are a employee, or if you are self-employed up to 5,750, you can get a tax break at whatever your marginal tax rate was. So if you were making 70,000 euros and you put 1,000 aside, you would get 45% approximately off your tax bill, or 450 euros. However, if your income was lower and you were, let's say, making 20,000 euros and your marginal tax rate was 24%, then putting aside 1,000 euros in a pension scheme would save you 240 euros of income tax. So the amount you save based on pension schemes depends on your level of earnings. Finally,
so it's like comes off your income, as it were.
Exactly.
Sort of comes off. Yeah.
Exactly. If you are in the Canary Islands, there's such thing as the reserve for investment in the Canary Islands, where you can deduct part of your income. And if you invest 50% of your income put aside for investment in Canary Islands companies, and you live in the Canary Islands and you are self-employed, you can deduct 50% of your income tax bill. So they don't take it off the top. They do something slightly weird with it. The only other things which can be relevant for mainly for lower earners within Spain is if you've got rental contract and rental income, if you've bought an electric car, or if you have, depending on the autonomous community you're in, some of the educational expenses in relation to children can be relevant. Those tend to be the most common, and sometimes home improvements to a newly purchased property. Outside of that, there are small deductions based on every autonomous community. The only other one, which is much more general, is if you've made any donations to any charities or anything else, which are recorded. If you've got the recorded slips, you can get some tax relief off that, which is relevant, particularly anybody who may have given during Dana or may routinely be giving to any other charitable organizations. There is tax relief available for people who have made donations. Now, I'm aware I've rattled through lots of stuff, so I'd love to open to the questions, remaining income tax questions, which people may have. And this is a link for a general free consultation with other members of my team, should you so wish. But please, how about we kick off with a few of the last questions?
I've got a couple of questions here. Is one about Autónoma and being out of the country.
If you are legally able to work in the Dominican Republic, you could register as self-employed in the Dominican Republic and deregister as Autónoma and continue invoicing. You would then file, for the time you were in Spain, the non-resident tax rate of 19 to 24%, because you'd be non-resident, and you'd make a resident tax return in the Dominican Republic. If you can't legally work in the Dominican Republic, then this is more tricky, because then you largely would need to maintain registered as an Autónoma in Spain. But if you can go to the Dominican Republic, particularly if that will bring you below 183 days in Spain, if you're in Dominican Republic for more than 90 days and you're in Spain less than 183 days, you can deregister in Spain as an Autónoma, file the Modelo 036 to deregister your tax residency in Spain, and start declaring your taxes in the Dominican Republic.
You don't have a branch there to assist Daniela with registering
We do not have a branch in the Dominican Republic, and unfortunately we don't even have a partner in the Dominican Republic yet. We do have in some other Latin American countries, but unfortunately the Dominican Republic is not there.
Okay, another international one. This is sort of straying slightly more into more immigration than tax, but as a general principle, it might be possible to give an answer.
Yes. If you're fully remotely working, I go back to the example of the factory. Your factory is you and your laptop. It does not matter that your income has no Spanish origin. And this is something slightly deceptive. When you look in tax law, one of the things they call about is source income. Spanish source income is actually income derived from you working from your laptop in Spain. It is not based on where your client is. So even though you're being paid by a client, which is not in Spain, this income will be taxable. So if you are EU citizen, self-employed with fully remote work, if you move to Spain and you're in Spain 183 days or more, you will be tax resident. If you are less than and therefore you should pay autonomous social security and income tax in Spain. If you are self-employed from another jurisdiction, it is possible that you can maintain it if you stay below 183 days, as long as you maintain a significant enough link in that other jurisdiction.
Okay, that's great. And so we've got 5 more minutes. I've got one more question here. If anybody else has got last minute questions, please get them in now, because we have 5 more minutes of Louis' brain to make the most of here.
So again, this comes back to the concept of I do not have Spanish income. Actually, you do. So technically, and this is again where we go into gray area difference between Spain. Technically, you are currently working as self-employed from Spain. You should register as self-employed in Spain. And then if you stay less than 183 days, you would file the non-resident tax return. Now, that's the technical rule. In the practical cases of your tax filing and everything else, if you think you're going to cross 183 days in 2025, you should register as an autonomo in the moment that you know that you're going to cross that, okay? Not necessarily afterwards, because all the earnings you make previously, even if you file them under Canadian self-employment, you will then need to pay the income tax difference here in Spain, okay? So even if, let's say, you work for 90 days, 100 days, and I would recommend registering as self-employed basically at the point when you know that you're going to be tax resident. The Spanish legislation says you already need to be registered, even if you don't know if you're going to continue being resident. However, that's a classic case of something which in practice is not enforced or applied. So all I would say is at the point that you know you're going to be staying, apply to register as autonomous, basically. And you will need to
all
pay
these grey areas.
Yeah.
Okay, and we've got time for another one here about property.
So if somebody's an employed digital nomad resident holder and you sold your property in the UK, most likely you've moved under an A1 certificate. You sold your property in UK last year, the year that we became tax residents in Spain. So you might be liable for capital gains tax on that property sale. Now, if you moved in the second half of the year and you're less than 183 days, you should be filing non-resident taxation for this year. Equally, if your partner's moved as an employed digital nomad resident holder, within the first 6 months, they can apply for Beckham's Law tax treatment. If they get Beckham's Law, then their overseas assets are non-taxable. Savings and ISAs are taxable on dividends and interest income, but only if you have capital. Just trying to make sure I'm not doing anything wrong on this one. It really depends. When you sold your property in the UK last year, if you were in Spain more than 183 days, and if you were in Spain more than 183 days, did you register under Beckham's Law? If you registered under Beckham's Law, then, and you are covered by that, then you're clear, but both of you should have applied, not just your husband, your partner. If instead you applied as you did not get Beckham's Law, but you were less than 183 days, we do not need to worry about it. However, it's important that from the date at which you applied for split year tax treatments in the UK, you filed the non-resident return in Spain, because you should have no longer had income tax being withheld. I probably recommend Claire on this one. It's probably worth at least a half-hour call just to clarify some of these nuances, because I think your case has certain particularities which are worth confirming, particularly with a house sale for the value of this, that it's quite a significant tax implication.
Brilliant. Okay, and one more in 40 seconds or less. Well, we can go over if you like, but want to.
So is there a minimum you can earn in another country without paying tax and as a tax resident? Now, there's one other thing which is interesting, which is called the exemption 7P. If you have employment earnings from a different country and they add up to less than 60,100 euros and you are tax resident in Spain, you do not need to file those earnings as long as the relevant tax has been paid in the other country. This can be useful if, for instance, you worked 2 months in the UK as employed, 2 months in Ireland, and then you ended up in Spain, and the total income you made in those two countries is, let's say, 30,000. You made 30,000 in 4 months. Very good 4 months now I'm thinking about it. But you made 30,000 under employment. And under that, as it's less than 60,100 euros, you do not need to pay tax in Spain or declare that income, even while filing resident. If it's self-employment earnings, then actually, yes, you do need to pay tax on it as tax resident. Technically in Spain, from €0 on overseas income, it is something you must declare, but you can deduct tax withheld in the other country. So self-employment, taxable. Employment, not so taxable, depending on if it's less than
like everything in Spain.
Yeah.
Brilliant.
If you're physically outside Spain, then it's less than 6,100. Yeah.
Fantastic. Well, we've come to the top of the hour. I think we've actually covered an incredible range of diversity of questions here we've thrown at you, Louis, on this one. That I think that's been really helpful. There's lots of nice comments coming back, thanking you for that input. If people have questions watching this back, if it's a simple general question, pop it in the comments thread. I know Louis will try to get to as many as possible, but in many cases, you'd be better off booking in either the free consult with Entre Tramites if you're not sure what kind of advice you need or something, then book the free consult. If you need specific individual tax advice on one of these complex situations that we've looked at today, then I strongly recommend booking in for the direct session with Louis on his calendar, which is filling up fast, I think, after today. But definitely get in there. I've shared the link a few times. I'll make sure it's in all the comment threads. I think for me, one of the biggest takeaways from this is simply how much falls into that grey area of, yes, this is the law. Yes, this may or may not get enforced. I think that remains one of the most frustrating things for me about doing business and living in Spain is all these things that, they may or may not come for you in 3 years and 11 months and decide they're going to enforce it or not. But, this is what we're trying to navigate through. And it's incredibly helpful to have the support of Entre Tramites in this community to help figure that out as we go along and to stay across all of the changes. So thanks ever so much, Louis, for all that you and your team do to support Remote Work Spain and to support our membership in the community and in these special events. It's incredibly helpful.
Absolute pleasure, and thank you for having me. And we're here for your income tax return and your Modelo 720. I really would just emphasize the Modelo 720, Form 720. If you do have those assets, if you were living in Spain last year, that's very important to file, particularly in your first year. Keep on the right side.
And that's up next.
Spanish bureaucracy happy. Yeah.
Yep.
So
okay, we'll put some more links about that, I think, over the next couple of weeks because that's coming up fast. So
that's coming up fast.
Yeah. Okay.
Pleasure.
Thanks, everyone. Have a lovely lunch. Lots to think about. Bye now.
Bye.